Hello and welcome to this week's Australian Stock Market Report. Now this week we're going to look at why you do not really need to be worried about whether the Russian invasion of the Ukraine will affect the market. Then we'll get into the Australian stock market so I can share with you my thoughts on where it's heading, along with answering your questions and looking at stocks for you. I'm Gillham, the Chief Analyst here at Wealth Within, and we're Australia's most trusted stock market educators. Now before we move on, thank you for showing your support for our channel and hitting that subscribe button. And remember, as you subscribe, remember to click the little bell on the right of it so you keep up to date with our latest videos. Also remember to tune into our live Australian Stock Market show, which is on every Tuesday, 7 to 8 p.m. Australian Eastern Time. Now this is a show where you get to ask us, the stock market education and trading experts, to look at your favourite stocks and answer all of your most burning questions. Now, the Russian invasion of the Ukraine has really caused many investors to question whether they should continue to hold stocks or move to more defensive assets. Now, whilst these concerns are acknowledged, given that some divested their assets when the conflict started, fearing that the market would crash, unfortunately, the research has not supported these concerns. Now, during times of war, the stock market tends to be pretty resilient. Over the last 100 years, there's been at least one war occurring somewhere in the world. If we narrow our focus to the more significant wars that relate to the Australian and/or US markets, there is mixed results as to whether a war negatively affects the stock market or whether it's just the economics at the time that was the driving force behind how the market unfolded. Either way, one thing is certain, and that is that markets don't just crash because of a war breaking out. In fact, markets have been known to rise during times of war. Now, whilst the severity of any move up or down can be affected either by an acceleration or slowing of the trend, and at times stalling of the trend, our research indicates that markets are more likely just to continue following the economics of the day. The key to understanding the current market is the fact that the Russian invasion of the Ukraine was a known fact, and so any social mood that might have driven the masses to react was already in play prior to the invasion. Since the invasion commenced, the Dow Jones, S&P 500 and All Ordinaries Index are all trading higher, despite the market showing some weakness in the last few months. Now this is due primarily to normal market cycles rather than the invasion itself. Now it's time we discuss the market, so let's start with what were the best and worst performing sectors last week. The best performing sector is financials, which you can see is up 2.20%, followed by consumer staples up 0.28%, and consumer discretionary that was down 0.47% last week. The worst performing sectors, well, they include materials, which was down 3.44% last week, followed by information technology down 1.79%, and communication services that was down 1.63% last week. Now the best performing stock was Incitec Pivot, that was up 12.8% last week, followed by Northern Star Resources, that was up 6.72%, and Evolution Mining, that ended up last week up 5.48%, with Combank not too far behind, up 5.05% there. Next, we have the worst performing stocks in the S&P ASX Top 100 stocks, and the worst stock for last week was Rio, was down 11.74%, followed by BlueScope Steel, that was down 9.48%, and Magellan Financial, that was down 8.27%, and not far behind was Virgin Money, down 8.18%. So what do I expect in the market moving forward? Well, let's get into the charts for our S&P 500 All Ordinaries Index update for this week. We'll also answer your questions and look at the stocks that you've chosen for me. Now, last week was a bit of an up and down week. We were sort of up a little bit, down mid into week. We had a low on Wednesday, and Thursday and Friday were a little bit weak there. So it was an interesting market for there, but we really haven't done too much over the last few weeks, which is what I was talking about a little bit earlier in my market report, where, you know, whilst we've had the Russian invasion of Ukraine, our market's really held up, and so is the US market in both the Dow and the S&P 500. But as I was sort of implying, I don't know whether this is just the calm before the storm, where we've got another little bit more of a movement down, or whether it really is the start of a new upward trend. But let's go onto the charts and have a really good look at that. Now on your screen, on the left is the monthly chart, and on the right is the weekly chart. I'll just bring up the monthly chart a little bit, and you can see a lot of indecision through here. I mean, here was our all-time high there we set in January, but February, a lot of indecision, pushed up, couldn't do too much, came back and closed down in the bottom area there. Now this is really just 2 weeks of March. We've had now 2 full weeks of March. It opened up, pushed up, came down, and was really opening where we're, or closing where we're opening, and so really not doing too much at the moment. But is this the start of a new bullish run? Are we going to be seeing something like, I don't have my thing there, wherever that is, where have I got here? No. Is this the start of a new bull run from that low in January there? And are we going to be moving up to sort of 8,200, 8,600 points this year? Or is this just a bit of a pause in another downward move? Are we just going to start to float down here and get down below that 7,000 points that I was saying that could be a possibility? It would fall below 7,000 points, possibly down to 6,800 points. But let's have a look at the weekly chart to see a little bit more of the current psychology in the moment. And you can see here, there's that low in January, so there's our all-time high. It fell away 1, 2, 3 weeks down to that low. We've had 2 weeks really up, and the last 3 or 4 weeks haven't been doing too much. We've had that big week down there at the end of February, closing down there at 7,273.6. But 2 weeks ago, been a bit more bullish, but this current week here, we've just finished on Friday, the 11th of March, last Friday. You see we went up earlier in the week, we came down, and we come back in that middle range sort of there. So whilst the market is up on 2 weeks ago, or a couple of weeks ago when the war broke out, it was down on the week before, so it's really a nothing week. Interestingly, though, the low there at 7,242, is below the week prior, which was 7,249, just a little bit below, but not below that. If last week had have traded below that, then I would be a lot more confident that this low would be challenged, if not broken, and the market would go down below 7,000 to 6,800 points. But really, these two bars of the last 2 weeks have really been contained in the prior week's bar there, that one for the end of February. And if as long as it stays in there, I'm okay. But I would like to see a move up this week. If this coming week we see a green bar here and it moves through, especially if it moves through that high there at 7,646, then I'd know. As soon as it moves through there, I know that that low is confirmed, and we're in now a bullish phase of our market, a bullish uptrend. So right now the jury's out a little bit. It really is time to be patient, and this is where I keep telling people is there are times to be in the market and trade, and there's times to sit back and not do anything and wait and prepare yourself. And Janine and I were really sort of talking about that to some degree on last Tuesday night when we were talking a bit about Buffett, about buying doom, selling boom, being patient, why Buffett's sitting on $144 billion in cash. He's waiting for opportunities, and so are we, and we're not fully invested. And whilst you always need to have a watch list of stocks that you might be bringing into your portfolio, it doesn't mean you need to be buying all the time just because you've got cash. So sometimes you just sit back and wait for a better time. And this is what we're doing right now, is you sit on your hands and just wait till the market tells you it's a direction. And so it's like you're sitting at a traffic light. And I do use that analogy quite a lot, traffic lights. We sit at traffic lights because they're red. And that just says, the probability says if you go through that red light, you probably could get hit. At the very worst, you might have a serious accident, but you might, at the very least, you might get a fine, basically, or you might get away with it. But you sit at the traffic light because you know the risk is high. When the light turns green, you just move off nicely, and you know it's generally going to be pretty safe for you to be able to do that. That's what we're waiting for now, is whether we're getting a green or red light. At the moment, the market hasn't picked a direction. It's still, we have to technically still consider it as being down, because that's where it has been. Over the last couple of months, it's been a little bit more down than up, so we need to actually believe that, well, not believe, we need to say that the market is down and is trending down until it tells us or confirms that it's not trending down. And as I said, when it moves above that previous peak that I mentioned just a minute ago, that would confirm that the low is in. But until that point, I have to assume that it's going to continue to fall away. It may not, but I need to assume that, and the market will tell us direction, and that's what I want to stress to everybody. Wait for the market to tell you what it's doing. Wait for the stock to tell you what it's doing. That's sort of what I was saying about to Joe. BHP's, when it tells you it's going up, then you buy. When it tells you it's going down, you sell it. That's pretty much simple. But what rules are you using and what analysis are you using to confirm that. That's really what I was trying to say to Joe, and what I'm trying to say to you right now is just be careful, sit on your hands, be patient, keep your money in the bank, keep your cashed up, look at some great stocks like Joe is, look for the opportunities they're going to present, because there's going to be some awesome stocks over the next few months to profit from, and you will be able to profit quite handsomely for the rest of the year. So I'm not too worried about the market. I still don't think it's crashing, even though I had a lot of comments the other week of people telling me I was crazy that the market's already crashing, and yet if it was crashing it'd be falling. It's not. So, and I'm not saying it can't do that, I'm just saying I don't believe the market's crashing, and I don't believe it will be crashing this year. But this time next year we'll know, won't we? And somebody will be right on that, and to me that's not the point. My point is always about having rules around buying and selling, and what you do. It doesn't matter what the market does. I can't control the market, I can't control the stocks. I can just control when I get in and when I get out. That's all I need to know, and I need to have rules around that. So that's it for my market update this week. So let's get into your questions for me. All right, the first question that we do have today is from Freya, who says, excellent show. Can you please share your thoughts on SOL or Sol Patterson's? She goes on to say, I don't own it and am looking for the medium term. Thank you. So let's go and have a look at Sol Patterson on the charts. On the left is a monthly chart, and on the right is a weekly chart of Sol Patterson. And right now at the moment, all you can see this stock is falling away. So Freya, it's something that I wouldn't actually be in, but let's have a look at the stock on a bigger picture. And you can see here that its high there was in September last year, and it's been falling quite heavily since then. So if I just put my little tool on here, you can see it's down about 39%, sorry, 39%. And this month's been a bit of one of indecision, where it's opened right down here at $24.91 and pushed up, and it's now come right back down. But this is this is 2 weeks obviously into March, so right now it is looking like there will be further fall. So I'd still be sitting back on this one, not trying to get into it, because I know a lot of people will be looking at this going, oh, it's cheap compared to what it was back in September, so let's get in, because there's a perceived notion that it is cheap, but it's not cheap. If this thing trades to $20, is it cheap at $25? And the answer's got to be no. But it's all too common for people to jump into stocks thinking they're cheap just because they're falling away. So until it stops falling, then you need to stay out of it, and we need to make sure that a stock has started to rise before we do get into it. And all too often we see people buying on these little periods here where it rises up thinking, oh, it's cheap now, it's got dropped down to sort of, $26. They buy in here only for it to fall away. And anybody buying in through here early March over this is the daily chart we're looking at. That should be a weekly chart I want to look at. You get people buying in through here, and anybody sort of buying in through here might be really, really disappointed, because look at this bar. This is this week's current bar. It gapped open from the week before, so it closed at 26.02. It gapped open last Monday to 26.54, and then it traded all the week down and to close on its low. That's its lowest close since we go right back here. So we're right back to 2020 before we have a lower close on this stock. This would suggest to me that it's got a lot further to fall. I would expect it to fall, probably at least to $20 based on what I'm seeing now, and it could even go further down to around that $16, $17, $18 mark at the moment. But right now, what I'm seeing is it's probably going to be hitting, as I said, down to that sort of $20 mark or below. So just stay out of it, Freya, at the moment. Regardless of whether short, medium, and long term right now, what you can confirm, and this is what I talk about when trading the market, is only trade on what you can confirm. Don't trade on speculation. So trade on confirmation, not speculation. Right now, yeah, it's cheaper, but it will get cheaper by the probability, because what I can confirm is it's going down. And as an investor or trader, if it has been going down, I need to assume it will continue to do so until the stock tells me it's not. So that's what I'll be waiting for, is for the stock to tell me that it's not going down anymore. But thank you for bringing in the question. It's really, really good, and I'm glad you're looking at it. It is a great stock when it trends, this stock, and it does trend really, really well when it starts to move up. But right now, just a little bit too early, Freya. Now I wanted to bring up something that resulted from a question that I actually answered last week for Joe, and it was on BHP. You might remember I did get a lot of comments from people about this, whether it's on email or they've put the comments below. in the comment section on the video from last week's video. But to jog your memory just a little bit, Joe bought BHP about a month ago, roughly, or a month before the question that he sent through. And he was debating selling it as he was worried about the market, but had questions around the dividend and more specifically the franking credits. Now, Joe then posted a little bit after the original email or the original question, and then said he'd sold it before I got to answer the question. So, and I answered that last week, and a lot of people came back to me and said, I loved what you did for Joe and the answer you gave, and etc. etc. But under that video from last week, so if you go to look at last week's video, you'll see this post from Joe, and Joe posted a comment under last week's video, and he said, thanks Dale for your response. You're pretty much spot on, basically. That's what he's saying, because I made some assumptions about what he was doing in his investment strategy and his rules for buying and selling. He said, sold out due to fear and brought in with no real entry apart from commodities being in demand at present. I will finish your book and assess whether I want to get involved in some of your educational programs. Thanks again. And I look forward to watching tomorrow night's show. So that was what he did. Then another viewer of the show or of the video came back and responded to Joe around the dividend question, which was quite nice that they did that. And then Joe posted a comment in answer to that. So Joe says, at Crowboy9798, hey, yeah, I'm talking about the 45-day rule. No, I have several other holdings. Thanks for the response, Cowboy. I trade through my company so I can get creative with my tax, so it's not personal income. That comment from Joe's all fine, and I really had no issues with the person answering Joe and Joe's comment or reply to that. And so I really don't have any issues with it. But then Joe actually added, he said, BHP is back down today, so I may look for another entry over the next few weeks. And that one made me go, Now, to me, it's really interesting, and I'm not trying to be, I'm using this as a highlight of what people do, not to have any sort of go at Joe, because Joe's trying to make money from the market. Now, if you follow the flow, Joe bought last week, or bought BHP a month ago on no rules, or very little rules, only just that he thought commodities were in demand, so BHP will go up. That's not a rule to buy a stock, and no reason to buy a stock, and there was no real buy signal to get into BHP. Then he sold it on no rules again. And last week you might remember when I said, you need to buy and sell on rules, otherwise speculation is not something you should be trading over because it's very hit and miss. Now, my analogy is if you were driving along and you drove through a red light, and let's say you got away with that, there was no flashing cameras, you didn't hit anybody, and you drove through that, was that luck or was that good driving? That's what you've got to look at. So, and to me, if you drove through again, would you just keep driving through the red lights from that on? Because, I got away with it once. I'll just keep driving through red lights to see what happens. Or do you think your probability of getting cleaned up at a red light is going to increase the more you drive through red lights? And that's really essentially what people like Joe are doing there. And Joe's just an example. And again, I said, I'm not trying to be rude to Joe, but this is what so many people do. I know Janine and I in our last live show last week or last Tuesday, we talked a bit about Buffett, and I mentioned on the show that one of Buffett's famous sayings is buy in doom, sell in boom, but everybody does the opposite. People often ask questions of experts like us, and I've had people do that to me at major investment expos and trading things. General member of the public come up to me. I've had them doing it on all sorts of media, whether it's things like Sky Channel or whatever else, asking me questions, and they ask for your advice, and then you might see them months later and you say, how did you go with that advice? And they go, and they didn't take your advice. And one example I remember very, very vividly was a few years ago. Some gentleman, he met me, he spoke to me face to face at an investment expo, and then I was about 6 months later, I did remember the conversation with this gentleman because I'd had a couple of conversations with him over the time, so I remembered the conversation. And I met him outside my accountant's office one day, and he goes, oh, Dale, and he said, do you remember me? And I said, yes. And I said, but we said to do da-da-da. I said, did you do this? And he said, no. And I said, how are you going? And he said, I've lost a lot of money. because he didn't take the advice. And that's really what I want to highlight here is no use asking for people to answer questions and getting advice if you're not going to follow it. BHP, Joe said he might get into BHP because it's fallen for a couple of days. So I'm going to have a quick look at BHP, and I'm going to keep talking about this, and let's just bring that up now. So if you go with me to the chart, I'll just bring up BHP. This is BHP, and this is this week, so I'll bring up this week. So BHP gapped up this week. It closed last week, so I answered Joe somewhere during this week, so that was last Monday down through here. So BHP moved up, gapped up, and it was making money, and from where Joe sold it, I forget what the price was he sold it at, but BHP moved up 9% last week and did very, very well. This week it's come back a little bit, and you've seen a couple of days down on the stock. So there was the other day, that was Monday. Tuesday went down, Wednesday went down, Thursday is down, Friday it gapped open but closed low. I suggest it might come down a little bit more. But none of this is a reason to just jump into BHP. And I'm not saying there aren't rules, or possibly could be some rules for Joe to buy BHP. What I'm suggesting is trading on rules is fraught with danger, just like driving through a red light. And it doesn't matter whether your name is Joe or George or Fred or whoever you are, is unless you have solid rules, you're going to continue to make mistakes. And you might get away with it once or twice or 3 or 4 times and you go, great, and then you'll continue to do it. The more you make money from doing something by guessing, the more likely is that you're going to make a mistake one day that's going to cost you big time. And generally, I know Joe was talking about considering whether he should be doing one of our educational programs. I don't think you should be considering it, Joe. I think you just should be doing one, because you're obviously really keen on the market. And I think that's fantastic that you're really keen on the market, but you do need to tidy up your rules and your strategy, because you'll make far more money more consistently, because you're going to trade on confirmation, you're going to trade on rules, and you're going to trade on what you know and can confirm. And that really tidies up your trading, because all too often I find people lose 10, 20, 30, 40, $50,000 or more because they don't follow rules. They get away with it for a few times, and it's generally more with the more speculative stocks, not necessarily a BHP. So you're picking a great stock, and I love that you picked a great stock. I love that you thought about commodities being a bit more, a bit more in demand, and it may push BHP up. But, you can't just throw darts at a board and hopefully that you're going to make money out of it, and do that consistently. It will cost you more money in the long run, and that's really what I want to highlight here. So thank you for the opportunity to give an example and a bit of education to everybody, because it's something we see as experts all of the time. People get in our faces, ask us questions, and then we give them really great advice, and people just don't take it. And I get a lot of, obviously we teach people how to trade the market very, very successfully. And when I'm mentoring our students, they say, I'm going to barbecues and people start asking me questions. And I said, it won't be very long before you stop answering the questions. And they go, what do you mean? I said, because people won't do what you talk to them about. Whilst you really know what you're talking about, you'll actually stop talking about it and telling people that you're a trader and what you're doing, because most people, whilst they ask the questions, don't really want to know the answer. And if they do, they won't take it anyway. So please don't take this offensively, Joe. As I said, right now I think you should be having some rules around what you're doing and making sure you have solid entries and exits, because the consistency of profit will be a hell of a lot better for you. But thank you very much for sending in your questions, Joe, and for posting and being a part of this forum. I think that's fantastic. And if you have questions like Joe, you can send those in. And for anybody, please, thank you for sending in your questions and posting comments onto our chat thing down below. It really is good. Now that really is just for people to ask questions of me so I can bring them up next week. But remember, the best way or the best chance you have of getting your email answered or your question answered is to publicly subscribe to our channel and then type your question in below in the comments section. Now, the other thing I want to mention before we go is sometimes people ask me about US stocks. This is called the Australian Stock Market Report for a reason. It means I don't handle US stocks. Otherwise, it'd be called the US Stock Market Report. So please, only Australian stocks and questions about the Australian market, please. Remember that here on this channel, we do these Monday market reports each and every week. And we also do our live stream every Tuesday night, 7 to 8 p.m. So see you there tomorrow night. Remember, hit that subscribe button, give us a big thumbs up, click the bell on the right of it so you know when we upload and go live. That's it from me. I'm Dale Gillham, the Chief Analyst here at Wealth Within. Goodbye, good luck, and good trading.